Imagine waking up one morning to find that everything you owned, your savings, your investments, even your future, had been wiped out overnight. For over a century, the US stock market has delivered incredible wealth, but it has also collapsed in ways that left Americans shocked, broke, and scared for the future. Today, we're looking at the five biggest stock market crashes in US history. The moments that shook Wall Street, broke families. 1. The Great Depression, 1929. The story begins in the roaring 1920s. The stock market wasn't just growing, it was exploding. Everyday Americans, factory workers, teachers, even farmers, were buying stocks. Many borrowed money to invest, convinced prices would never fall. But in October 1929, the bubble burst. On October 24th, now called Black Thursday, panic hit Wall Street. Within days, billions of dollars vanished. By 1932, the market had lost nearly 90% of its value. The crash didn't just hurt investors, it destroyed the entire economy. Thousands of banks collapsed, wiping out people's life savings. Unemployment soared to 25%. Families lined up for bread, children went hungry, and the world entered the Great Depression. The lesson: overconfidence and speculation are dangerous. When everyone believes prices will always go up, that's when the fall is. 2. Black Monday, 1987. Fast forward almost 60 years. Computers had entered Wall Street, trading millions of shares in seconds. On Monday, October 19th, 1987, panic spread across the globe. The Dow Jones Industrial Average fell 22% in a single day, the biggest one-day percentage drop in US history. To put that in perspective, if the Dow were at 30,000 today, that would be like losing more than 6,000 points before dinner. The causes? A mix of computerized trading, panic selling, and global uncertainty. For ordinary investors, it was terrifying. People turned on their TVs and saw their life savings disappearing minute by minute. The crash was sharp, but surprisingly, recovery came within 2 years. Still, Black Monday proved how quickly technology and fear. 3. The dot-com bubble. 2000. Next came the 1990s, when the internet was exploding. New tech companies appeared every day, many with no profits, only big promises. Investors didn't care. Everyone wanted a piece of the so-called new economy. By 2000, the Nasdaq stock index had tripled in just a few years, but reality hit hard. Most of these internet companies weren't making money, and investors finally woke up. From 2000 to 2002, the Nasdaq lost nearly 80% of its value. Companies vanished overnight. Billion-dollar fortunes became worthless. The lesson? 4. The 2008 financial crisis. The most devastating crash since the Great Depression came in 2008. It started with a housing bubble. Banks were giving risky loans to people who couldn't afford them, and Wall Street packaged those loans into investments that looked safe but weren't. When people started defaulting on mortgages, the entire system cracked. Lehman Brothers, one of the biggest investment banks in the world, collapsed. Stock markets across the globe went into free fall. In just 18 months, the S&P 500 lost half its value. The damage was massive. Millions of Americans lost their homes, their jobs, and their retirement savings. Families that had worked their entire lives saw their wealth disappear. The government bailed out major banks, sparking anger that ordinary people paid the price for Wall Street's greed. The lesson? Debt-fueled bubbles are dangerous, and when banks take too many risks, the whole economy can suffer. 5. The COVID crash. The final crash on our list came with the global pandemic. In March 2020, As businesses shut down and uncertainty spread, investors panicked. The Dow Jones fell nearly 3,000 points in a single day, the worst single-day point drop in history. Markets tumbled so fast that trading was automatically halted multiple times to stop the panic. People feared we were heading into another Great Depression, but this crash was different. Within months, markets recovered, thanks to massive government stimulus and emergency action from the Federal Reserve. By late 2020, stocks had not only bounced back, they were hitting new records. The lesson? Modern markets move faster than ever before. Fear spreads quickly, but recovery can come just as fast. These 5 crashes show us one thing. The stock market is powerful, unpredictable, and deeply connected to the lives of ordinary Americans. Sometimes it destroys wealth in a heartbeat. Sometimes it builds fortunes beyond imagination. But history proves that no matter how bad the crash, the market always finds a way to rise again. Which of these crashes do you think had the biggest impact on America? Drop your thoughts in the comments. And if you want more stories of money and history, don't forget to like this video and subscribe to Finance Flashbacks. See you in the next episode. The market falls, numbers vanish, screens glow in red, and for a moment, the world feels heavy, uncertain, and loud. But then you pause, you breathe, and you remember that nothing moves only upward, that growth is not a straight line, that even in chaos there is rhythm, and even in loss there is learning. You watch the charts move like tides, crashing, then retreating, and in that movement you see a reminder that storms do not last forever, that patience can outlive panic, that clarity comes not in noise, but in silence. And so you sit with the moment, you do not run from it, you let it pass through you, knowing that tomorrow the sun still rises, markets still open, and opportunity still waits. Because resilience is built in these moments, when everything feels like it's falling apart, and yet inside you is the calm that says, this is not the end, this is the cycle, and in every cycle there is another beginning. The market falls, numbers vanish, screens glow in red, and for a moment the world feels heavy, uncertain, and loud. But then you pause, you breathe, and you remember that nothing moves only upward, that growth is not a straight line, that even in chaos there is rhythm, and even in loss there is learning. You watch the charts move like tides, crashing, then retreating, and in that movement you see a reminder